Did you know that as an automobile dealer, you can earn tax savings based on the operations of your dealership? It's actually a relatively simple process of utilizing tax incentives already in the IRS code. Of course, your first reaction is probably, if it's that simple, why haven't I heard about this before? And that's a great question. Hi everyone, Tom Brody here, the Found Money Guy. I help companies grow their businesses by finding money in places they never even knew to look. And before I get to that why question, let me detail the available tax savings. For auto dealerships, the main areas are cost segregation, employee hiring incentives, and commercial property tax reduction. Now let's talk about the first one, cost segregation. Auto dealerships are excellent candidates for a cost segregation study. These businesses are unique in that they routinely remodel their entire facility every few years just to maintain the standards dictated by their manufacturer they represent. Now, while the manufacturers offer incentives to encourage these renovations, these incentives are not enough to offset the total cost. A cost segregation study allows auto dealerships to reclassify elements of their building as personal property, which has a much faster depreciation rate. Dealerships are correct in depreciating other personal property elements such as equipment, furniture, and floor coverings over a 5 or 7 year period, but they often overlook other structural elements that also can be reclassified as personal property. Our construction engineers will review all blueprints, architectural drawings, and electrical plans to identify all elements, including those in past renovations, that can be brought into the personal property category. This reclassification can bring significant benefits to the dealership. From our experience, it's not uncommon to document as much as $200,000 in accelerated or missed depreciation for every $1 million in building value. Now, this missed depreciation can then be brought forward into the current tax year to reduce the dealership's taxable income. Now, if this isn't found money, I don't know what is. Number 2, the employee hiring incentive. From the sales floor to the service bays, it takes a lot of employees to make an auto dealership hum. Now, how would you like to get paid for hiring all those folks? Well, you can, and I can help you with that. The Work Opportunity Tax Credit, also known as WOTC, is a federal tax credit available to any employer who hires individuals from certain groups that face barriers to employment. Now, this program is truly a hidden gem in the IRS code and one that many companies fail to utilize. In fact, most of the people that qualify for this tax credit have never heard of it and don't know that they qualify. WOTC credits typically range from $2,400 to $9,600 per employee. For auto dealers who are constantly hiring and replacing employees, these credits can add up to tens of thousands of dollars each year. WOTC credits apply to both full-time and part-time W-2 employees and are employer-centric, not employee-centric. Now, what this means is that if an employee works part-time for more than one company, each company can claim a WOTC credit on the same employee. Oh, and by the way, you can carry these tax credits forward up to 20 years. Now, number 3, property tax. Probably the most frustrating bill that comes each year, or in some cases twice a year, is the property tax bill. Our studies indicate the average auto dealer in the United States is being overcharged by 20% on their property taxes. If your dealership is paying property taxes over $30,000 a year, you need to have a property tax review conducted on your facility. Even for dealerships who've had their property taxes reviewed in the past by another company, we found additional savings. Now to the why haven't you heard about this before question. The truth is, your CPA or tax professional is primarily tasked with keeping your income taxes filed on time and making sure you're not violating common tax rules. They don't have the time, manpower, or expertise to know all of the intricacies of these specialized tax incentives. It's not their core business, and it's not their job to lower your tax basis. Now, if your CPA is too busy to handle these tax incentives and you're too busy with customers, who are you going to get to help take advantage of these opportunities? I guess you need me, the Found Money Guy, to help you. For me and my team, this is our core business. We do this every day and have access to all the specialists required to ensure you get all the savings your dealership deserves. We've worked with auto dealers nationwide to uncover tax savings that allow their dealership to expand, hire additional staff, and reinvest in their business. So please contact me today to schedule a quick 20-minute meeting. There's nothing you can do in 20 minutes that will bring more value to your dealership than a quick meeting with me. If you don't believe me, give me 20 minutes and I'll prove it. My name is Tom Brody, and I am the Found Money Guy.